Are you this trader who enter here on breakout of a trend line? If yes, then this video will change your life to enter trades before the breakout. And you will always make sniper entries. In this video you will learn to enter trades here before the breakout. And this will also reduce your stop loss and have higher rewards on your trades. And if you're not satisfied yet, then you will also learn to make this sniper entries before the breakout. This video will cover everything that you need to get started trading with low risk. Like from this example, we can see that this is a zero drawdown entry. Meaning once you enter the trade you are in profit in matter of minutes. And yes, you will also learn to use this strategy with the current strategy that you are using. Like for example, if you are using trend lines like this, you will learn to enter before the breakout. So if you miss to enter at the top, you can still enter here with the smallest stop loss you will ever see on YouTube. You will also be on the right side of the market. So now let's begin by learning this trading strategy. Have a pen and paper ready. Because I am about to show you everything that you wanted from the previous video. In this section of the video you will learn this. 1. How to draw supply and demand zones. 2. You will learn to draw the zone in different market conditions. 3. You will learn to make entries in all different scenarios. So even if you have watched the previous video, then this section of the video will give you more knowledge. 4. You will learn where to put your stop loss. 5. You will learn which candlestick formation you should avoid. 6. You will learn where to find this kind of trading signal. First of all, you need to understand what is a bullish or a bearish engulfing pattern. From this example, we can see that the body of the first candlestick is smaller than the body of the second candle. So this is what we call a bullish engulfing candlestick pattern. For beginners to understand this easily is that two candles with a different color and different body size will make what we call an engulfing candle. Here we can also see that we have two candlesticks with two different color and different body size. And this is what we call a bearish engulfing candle. Because the body of the bearish candle is bigger than the body of the bullish candle. Just bear with me because there are few traders who are still new to trading. So I will go step by step so that everybody can be accommodated and to answer all of your questions. Now we will learn on how to draw supply and demand zones on our chart. There are two types of way to draw supply and demand zone. The first step in drawing supply and demand zone is you need to be able to spot engulfing candles on a chart. So here on the first example we can see that we draw the zone from the previous bearish candle's high and the low of the bullish candle. On the second one we can see that we draw the zone from previous bearish candle's body to the low of the bullish candle. Now that we have covered on how to draw the demand zones, I know that there are few traders who can't draw supply zones because is vice versa. Our brains are embedded with things that are always going up, not down. To draw supply zone is very easy. So here on the first one we can see that we draw the zone from the previous candle's low end to the high. And on the second one here we can see that we draw the zone from the previous candle's body, or you can also say, on the open of the previous candle's open end to the high. If this video is fast for you, you can also rewind because every step is very important until the end. I know it's challenging when you want to draw the zone, but there are some annoying price action on the market. Here are some of the example that mostly can happen on your chart. I guess the first one we all understand it very well. But I can't assume that you all do. Here on the first one we can also see that the bearish candle's low is lower than the bullish candle's low. So when drawing the zone, take the low of the bearish candle. 2. We can see that we have huge wick that looks like a manipulation, so in this case, you will just draw the zone from the previous candle's open and to the low of either bullish or bearish candle's lows. And also choose the one with a lower low. And then we can see that the bullish candle is the one with lowest low. This will also help us to make a stop loss to protect our margin. And then lastly here, if you compare it with the first one, you will see that the bullish candle now is the one with the lowest low compared to the bearish candle. They almost look identical, but you will also understand why I love the third one the most, unlike all of them. Here you can see comparison of other ways to draw supply zone. It's all the same once you get the concept. If you backtest a lot, you will be able to draw perfect zones without even stressing. From these two examples we can see that we don't focus on the lows of the candles because now we are drawing supply zones. But we focus on the body of the candlesticks and the highs. And these patterns are all the same, but with a different market volume. Now you will learn how to enter the market. The first step, guys, is to understand this candlestick formation because we still have advanced video which is going to be long. I will show you step by step on what to do. 1. Identify your bullish or bearish engulfing candle. In this example we can see that we have a bullish engulfing candle pattern, so we will draw a demand zone like how I have explained in the beginning of the video. 2. Draw the zone on the previous candle's open and to the low of either the bullish candle or bearish candle. And in this case we can see that a bullish candle is the one with a lower low. So we will use that low. And this low will act as our stop loss price area. 3. Wait for the market to at least make one candlestick that is bearish before bullish confirmation candle. 4. Wait for the market to touch the zone before any confirmation candle. And sometimes the confirmation candle can be the one that touches the zone. 5. This one, let me explain because a lot of people might not understand it clearly, but I will try to keep it as simple as possible. Here on the first one we can see that the market closed with bullish engulfing candle after the zone has been touched. So this is the first confirmation candle that you need to understand. On the second one we can also see that we have bullish confirmation candle, and we can also see that the confirmation candlestick is not an engulfing candle. So once you understand the difference and risk, then this strategy will be way too simple for you. This section of the video you have to take notes because I am going to explain everything that will determine which trader you want to be. This will be the entry levels of the confirmation candle. That is a bullish engulfing candle. And please don't skip this part of the video without even understanding each pattern. 1. Here we can see that when the market confirms our bullish entry we will enter when the bullish engulfing candle closes. But the downside of this is that is very risky and the stop loss is wider compared any other pattern. But the good thing is that you won't miss any trades. And you will have a lot of signals to make. 2. Now when the bullish engulfing candle closes, now your entry will be on the previous candle's open. Or you can put a buy limit order on the yellow arrows facing to the right. This one is less risky compared to the first one. 3. Now here is where all of your sniper entries will start. You will put a buy limit order on the open of the bullish candle. Or below the candle in simple terms, just focus on the yellow arrows you will understand all of the pattern. And this one is less risky and small high reward. Like it's really good with rewards. The downside is, you won't have so many trade if the market confirmed with bullish engulfing candle. 4. Now here we reduce the risk even more, you will put a buy limit order on the bearish candles open. The bearish candle that we drew the zone with. 5. Now this is my favorite one, but it doesn't happen a lot when the market is confirmed with a bullish engulfing candle. The reason is the bullish or bearish engulfing candle has a lot of volume compared to so many candlesticks in the market. But this last two have a super small risk. So even if you lose a trade from using it, you see that it doesn't even hurt the account a lot. So but what if you trade like this only? And if you noticed on the last one, we put a buy limit order on the bearish candle's low. So if you were taking notes you will notice that this trade will happen only if the bullish candle is the one with a lower low. Here we can see what you should avoid at all cost. If the market trades below the zone before the bullish candle can appear, then the whole zone will be invalidated. Even if the confirmation candle trades below the zone before closing, it will invalidate the whole pattern. The reason is that we need a place where our stop loss should be. You will also encounter this kind of patterns where 2 or 3 zones stack together, and in this case if you're not like me, I will advise you to take the last zone. And don't use the first zone to enter and put your stop loss below the last zone. That will be very risky. I guess today you have understood that there are strategies with small stop loss and high reward, and you are learning that for free. Before we begin with the real chart example, I will like to teach you or give some advice to understand this strategy even more clearly. Here on the first one we can see that we have everything that is aligning with our strategy, but the candle close way too high, so this will make our trade to be risky. And bro, remember this, you don't have to trade every day. Or just because the market is open doesn't mean if you have the money you must enter everything you see moving. Look closely here. We have 2 patterns but different entry styles. The only thing that makes this 2 to be different is the low. Here on the first one we can see that the low was created by the bullish candle. And then here on the second one the low was created by the bearish candle. In this case it makes the sniper entries to be different. One last thing on the middle one is that we can also put a buy limit order on the open of the bearish candle. Like how we did on pattern 3. If you are one of these traders, this is the areas where you will find these entries. And this strategy will also help you to improve your entry game. I have combined price action with other theories and created my own strategy that I feel comfortable using. But it's annoying to keep information where I can just share for free. There is a lot that is coming from this channel, so stay tuned. Now let's begin with real chart example because I know you were all waiting for this moment. I won't follow anything that was not mentioned in this video because I feel like I have included a lot of steps for you guys to follow along. So from this example I want to show you step by step on what to do when you see a bearish engulfing candle on top of a trend. So let's zoom in so that I can explain everything. Now from here is where we are going to use all of the things we have learned from the video. But mostly we will focus on sniper entries and other entries too. So everything that you will see here you will understand if you understood the previous section of the video. We need to follow the steps that I have mentioned before. 1. Find a supply or demand zone. 2. Draw the zone. 3. Wait for an opposite candle before a confirmation candle. 4. Wait for the market to touch the zone before confirming. 5. Choose where you want to enter. And lastly, wait for the market to trigger your trade. Now that we have our supply zone ready. And also check on how I have drawn the zone. Now the next step is to find bullish candle before confirmation candle. So meaning every candle that is going to the zone. Then the next step is to wait for the market to touch the zone and also close bearish. And the bearish candle close after touching the zone, and that is what we call a confirmation candle. Then the next step is to decide on where to sell. After this bearish candle close on the zone is when we start to decide on where to sell. From this example is pretty obvious that we put a sell limit order on the open of this bearish candle. Then now we can see that the next candle just tapped it and it started to move lower. Then the stop loss will be above the zone. Also another advice, you have to be quick to place the sell limit. And also check for spread inside your broker. If the spread is higher then your stop loss will be high because we don't want to lose a trade because of spread or else change the trading broker that you are using. Now for take profit. We will target the previous lows because that's where the liquidity of the market is resting at. From this chart we can see that we have two lows that we can target as our take profit. For a normal person, let's say we target this first low. That will be a risk of 1.3 pips with a profit taking of 80 pips. For example, because some of you are beginners, if you have opened a trade with 0.01 size, your risk will be 13 cents and then your take profit is $8. You can also do the calculation during your back testing to see if you take this kind of trades only will be suitable for your trading style or not. Moving on to the next one here. We can see that this chart is way too complicated to be traded. But if we follow all the rules, things will be very simpler. So now I will zoom in here so that we can follow all the rules. As said before, the first step is to draw the zone. In here we will draw supply zone. And another thing that I didn't mention in this video is, on supply zone we sell, or the market has the potential to reverse to bearish side on the supply zone. Then on demand zone we buy, or we are looking for the market to be bullish. Now that we have the zone, we need to see some bullish candles before a bearish confirmation. And we can also see that. The next thing is that we need to see price touching the zone and closing bearish without invalidating the high of the zone. We can also see that is also available here. Look at the zone. This is the setup I said I love the most more than anything, and I am giving you guys so that you can learn it too. The sell limit order will be on the high of bullish candle before the bearish engulfing candle. And we can see that price tapped that price to the T. And another thing that might confuse you is the confirmation candle. I will add up that the confirmation candle is the candlestick that come after touching the zone, and the candlestick must follow the supply zone. In this example we need a bearish candle close. And for take profit we will start by targeting this previous low. Okay. Now I think I have done too much damage to the knowledge you have acquired. As we can see, the risk is 1 pip. This is the kind of trade where you will just see instant profit. And for take profit we can see that we are targeting previous lows. And I know that some charts won't have those lows. So stay tuned for future videos to explain that. This pattern doesn't happen a lot, but you can be this trader who just trade this entry only. This is an example of trade setup you should avoid at all cost. Even if it drops lower. Because I know there will be traders who will sell without any valid confirmation. So that's why my trading strategy is the only one with a confirmation entry. From this example we can see that price came to the zone and traded above the zone. So there is no way we can say that the bearish candle above the zone is our confirmation candle. This is another example of a complicated chart. Let's study it so that we can know of the things we need. I will zoom in here and explain everything. Now we can clearly see that this trade resulted in a loss. So to clarify this, you will also be stopped out. The motive of this trading strategy is to risk very low while having a high reward entries. If you see 100% win rate strategy, just run, bro. There is nothing like that. But did you know you could have caught this trade with everything you have learned in this video? We all know already that we can draw the zone from the previous candle high and the lower low of the candle. So this is an example of it. If you use proper risk management, you won't blow your trading account just because you think you are 100% sure that the trade will go into your favor. So let's say we lost the first trade. That means we can still try this one, but lowering our risk. And the confirmation candle on this setup is much higher. So this kind of trade I only take with lower risk. You can also pause the video here and study it clearly. But at the end of the video I will also include even more examples so that you can have even more knowledge. Now let's use the same chart again so that I can show you even another example. And guys, if you backtest a lot, making at least 1000 screenshots, you will understand which trade setup to take. So from this example I will show you guys on how to enter before the breakout of the trend line or a flag pattern. So firstly let's start by drawing our trend lines. Now we can see that our chart now is looking clean. But we need to avoid to enter the market at the breakout. So we will zoom in here so that you can see what we can do to enter as early as possible. Like I said, everything in this examples is available at the beginning of the video. From this chart here we can see that we have a zone here. But another thing is that we have a stacked zones. So because you are here to learn the easy trading strategy, we will take the last zone. Because that will give us a low risk and high reward. I guess from now you know how to make this sniper entries. From here after we see this bullish confirmation candle. Then we will place our 2 buy limits at this price points based on the structures. And we can also see that the market on the next candle it came down very strong just to trigger the entry. Now look at the risk only targeting the previous high. Risking only 7 pips just to make 92 pips. So as trader you will choose which entries you want to focus on. I know some of you might be wondering on which pair it works the best. To make sure that you never miss that, you can help the channel by subscribing. And it's free to do, bro. Why not? And also you won't miss the video where I show you how I came up with this take profit. I have used Fibonacci extension to come up with that take profit level. And also this is the thing that I discovered myself while backtesting. So most of the things that you will learn in this channel will be an upgrade of the previous strategies. And some of the things that I discovered myself. For support and resistance traders, this section of the video is for you guys. First we will draw the major level of support and resistance that is very strong or with a couple more touches. Now that we have our level drawn. If you don't understand support and resistances, there is future video that will still come, so stay tuned. So the next step is to find our demand zone on those level of support. And I have spotted one here. Now let's look closely at this area because I am about to explain something that is very important. As we can see, price touched the zone and closed with a bullish candle. And if you enter here, this trade will be very risky. But once I see that the market is confirmed, I will just put my sniper entry buy limit order near the zone. And I guess you know that already. If not, then go to the beginning of the video to finish up. Now let's see where we could put our buy limit order because the market is already confirmed. And also we can see that price just came to the sniper entry and moved higher. And guys, don't hesitate to put this small stop loss. I know it's hard to do. Unless if you want to give the market more money with huge stop losses. As you can see, this is a sniper entry. But what if you have missed the sniper entry? You enter at the close. Or if you were waiting for a retest to make a sniper entry. That means this trade will go higher without you. Okay. Now look at the stop loss and profit. We use support and resistance on this same chart, but what if I can show you that you can enter here? We will zoom in so that everything can be so clear for everyone. Firstly, let's draw the demand zone. Secondly, find a bearish candle before any bullish confirmation. Before we continue, I want to show you that we have a zone inside the zone. Or a stacked zone. So even if we tried to use it, the market just traded lower without confirming the bullish trend. So that means there will be no entry with this zone. Now we can see that we have a confirmation candle. So what we need next is how we are going to enter the trade. So on this chart we have 3 retracement entries because we won't enter at the close of the confirmation candle. So which one would you use? But what if you saw this happening? Now I guess we came to the end of the video. If you enjoyed this video, please consider giving it a like. And also guys, don't just watch the video and 5 minutes later you are in a trade. Those kind of comment I won't even try to entertain because you have to backtest a lot. So that this can be clearly so for yourself. And you should also be comfortable. You can't read a book on how to swing then boom. 1 minute later you are in the ocean without even trying to start at the swimming pool.